Hello, my name is Mel Holsworth from Holsworth Law & Associates. Welcome to our 2012 superannuation update for trustees of self-managed superannuation funds. It's the usual disclaimer that we go through that in relation to this presentation and all the others. This is general advice only and doesn't take into account your specific circumstances. Just remember that the SIS regulations and laws and the tax laws are ever changing, and so we'd ask you to seek our specialist timely advice before making any decisions relating to your financial future. Be aware also that this presentation is its own space, and as with everything, it seems to be ever evolving, and so if you want to get some further information or deeper insights, we would welcome your call. This is the 7th presentation in this batch of presentations all relating to contributions. It deals with government co-contribution. I would invite you to look at the other 6 contribution presentations, as you'll find good information in there that will be applicable to you. So co-contributions from the ATO, this is actually a tacky area that's ever being discounted by the government. They're making it harder and harder each year to make these claims, and according to the budget, it's basically halved in future years. There's a couple of tests that you need to be looking at and a couple of little tricks and traps, so I'll just go through some. The first thing you need to do if you've got an eligibility to claim a co-contribution is that you need to work out your total income. And there's 2 income tests that you, my client, must satisfy in order to be eligible for the super co-contribution. First is what's called the income threshold test, and the second is the 10% eligible income test. The income threshold test is a little bit the same as the 300k income calculation for the 300k and 30% contributions tax, in that for the 2019 year onwards, your total income is the sum of your assessable income, which is basically your net taxable income, and we add on then your reportable fringe benefits as per your PAYG certificate, and we also add on your reportable employer super contributions, which once again is your salary sacrificed superannuation contributions, not your mandated 9%, but your salary sacrifice. And then we take away from that any allowable business deductions, and that comes up to the income which the co-contribution is levied against. And of course, as you know, there is maximum income levels where the co-contribution is phased out completely. Second test is the 10% eligibility income test, and that in order to satisfy the 10% eligibility income test, 10% or more of you, my client's total income must be attributed to one of the following: either eligible employment or related activities to that, or you're carrying on a business, or a combination of the both. So if the income that you have from passive investments or from rental property gains or capital gains, etc., make up the greater amount of your taxable income, then it won't. Then you will not pass the 10% eligible income test. You must have at least 10% of your total taxable income to be at least one of those 3 areas or a combination. Okay. A couple of things to watch. Often the tax department actually doesn't pay the contribution, even though you may have be worthy to receive it, and you may have met the thresholds and met the tests. It actually doesn't happen. And most people don't even check it or follow up on it. And of course, we don't know from our side of things whether a co-contribution is received because we don't see your personal tax return. So we don't really know if you're making that claim. The claim for co-contribution is actually made on your personal tax return, and income and details must be listed on your personal tax return at labels F, G and H on your personal tax return. That then triggers a co-contribution calculation. Even if there is no amount to go in label F, G and H, you need to put zeros in that amount, in those areas, and that will allow the tax office to then go away and do the calculations. If you leave them vacant, any one of them, then the co-contribution calculation will not be made and it will not be paid. And as stated before, the amounts paid in the 2012 year and 2012 onwards is about half of what the previous year is. So co-contributions, honestly, is now becoming a little bit of a nonsense. The amounts are so low now that it takes away the greater incentive that used to be there under the Howard Costello government. It's now being whittled away, and certainly this government is not serious. Once again, this is further evidence that this government is not serious in wanting Australians to be self-reliant in their retirement. Thank you very much.